Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome everyone, my name is Andrew Rocco. I'm a stock strategist here with Zacks Investment Research. And today, March 4th, I'm going to be covering my top stock of the week. My pick for top stock of the week is going to be Zacks ranked number 2, IBM, or International Business Machines, of course. It's a multinational technology company that operates in various fields, including hardware, software, and services. IBM is renowned for its expertise in computing technology and has a strong focus on artificial intelligence. And obviously, AI is the hot area of the market currently, but IBM doesn't really get talked about too much. But the company has developed and implemented AI solutions across diverse industries, leveraging advanced technologies such as machine learning, natural language processing, and data analytics. IBM's AI capabilities are exemplified by its Watson platform, which I'm going to discuss later in the presentation. And full disclosure, we do own IBM in the Tech Innovators portfolio, which I manage, and I own it personally. So I just wanted to disclose that before we move forward here. Now, let's talk about AI in general and why I think we're at kind of the starting point. We're in the early innings, and the study that I'm going to show you now kind of exemplifies that. So according to a study by Bloomberg Intelligence, generative AI will become a $1.3 trillion market by 2032. The new report finds that the emerging industry could grow at a CAGR, that's a compound annual growth rate, of 42%. So the only thing that compares really to a CAGR of 42% that I can think of is the internet. So remember, the internet bubble, it started in 95, went all the way to 2000. I'm thinking that we're in the 95 to 96 period if we're comparing it to the internet boom. And the difference this time is a lot of companies like IBM, they're already profitable. They have a ton of cash on hand. So as I said, over the next 10 years, this internet-like growth would mean that we are still very early innings of the AI build-out. And IBM, though it's not talked about much, they're kind of at the center of this build-out. So IBM is poised to benefit from strong demand for hybrid cloud and AI, driving growth in software and consulting. The company's growth is expected to be driven primarily by analytics, cloud computing, and security in the long haul. A combination of a better business mix, improving operating leverage through productivity gains, and increased investment in growth opportunities will likely drive IBM's growth. And IBM spends about 7 to 8% on R&D, but as I mentioned, it's a massive company. So that's going to open a bunch of doors. Even if they're wrong on a lot of their R&D or a lot of their acquisitions, which we're going to discuss, a lot of these AI opportunities, they're asymmetric in nature. So they only need a few of them to work, and the company's going to benefit dramatically. And the company's already benefiting dramatically. You can see that their earnings are turning up, and as a result, the stock has turned up. And as you can see, the analysts are expecting those earnings to kind of keep drifting higher through 2027. So that's exactly what we want to see. And let's talk about those acquisitions. So the big acquisition a couple of years ago for IBM was the acquisition of Red Hat. It's an augmented open hybrid architecture initiative of the company. And the deal marks IBM's largest acquisition ever. And the combined company has redefined the dynamics of the cloud market for business. Specifically, IBM hopes to leverage Red Hat to help it become the world's largest hybrid cloud platform provider. And we've seen what cloud has done for companies like Amazon, which their cloud platform is actually larger than their e-commerce platform, which a lot of people don't know. So that's one key acquisition that could be huge. And then the other one is Apptio, which is a prominent provider of financial and operational IT management and optimization software, which they acquired for $4.6 billion. It's already bolstered IBM's IT automation capabilities And they're really taking these new companies and integrating it to what IBM already does well. So it'll be interesting to see how these acquisitions turn out, but they're already adding to revenue and earnings growth for the company. And I think that IBM's Watson will begin to bear fruit. It's a sophisticated AI platform that incorporates machine learning, natural language processing, and data analytics. So what makes Watson unique is its ability to understand, reason, and learn from vast amounts of unstructured data. And unlike traditional computer platforms, Watson excels at processing and interpreting human language, allowing it to comprehend complex information and provide insightful solutions. And a fun fact about Watson is it competed in the popular game show Jeopardy, and it won both of its matches by an overwhelming amount, which in my mind is a pretty impressive feat. It was playing the best Jeopardy players that the show could offer. And one thing we like to see here at Zacks is positive surprise earnings history. And IBM's recent EPS surprise history illustrates that Wall Street is estimating the big tech juggernaut. In fact, IBM has delivered positive EPS surprises in 18 of the past 20 quarters. So really consistent and impressive earnings surprise history from IBM. And then here is the thing that I perhaps like the most about IBM. It has a $171 billion market cap. So this is not a speculative investment. This is a well-known company, but it has the rare combination of a low beta coupled with price performance, price outperformance. So IBM's beta of 0.7 means that it has less volatility than the S&P 500 itself. So it's less volatile. Meanwhile, it's up 45% over the past year, while the S&P is only up 28%. So you're getting smoother trading than the S&P, and you're benefiting from that outperformance. And that's exactly what we want to see as investors. And then I like to say that I'm a techno fundamentalist. So I look at the fundamentals, which we discussed. Now let's take a look at the technicals. And you can't ask for more as far as the technicals go. You can see we have this strong uptrend, and then we have an earnings per share gap from that last earnings. And look at the volume on that gap up. The volume was 5 times the norm, which is telling me elephants are jumping into the bathtub. Institutions are jumping over themselves to get into this stock. And then notice how it holds tight, which means they're not willing to sell their shares. Even though they're up a lot of money in the stock, investors want to hold on. We got a quick shakeout here to shake out some of the weak hands in the stock. But overall, the chart is really telling me that institutions are accumulating shares. It's got a bullish chart pattern, and it's setting itself up for some post-earnings drift possibilities here. Thank you all so much for watching, and stay tuned for David Bartosiak's Top Stock of the Week.
All right, Andrew, thanks for that pick. I've got another one here. It is Zacks rank number 1 strong buy, SkyWest, ticker SKYW. It is the airline that I'm sure some of you used. Taylor on Zacks.com, see why I like it. The transportation airline industry is in the top 14% of our Zacks industry rank. Like I said before, Zacks rank number 1 strong buy with an A for value, B for growth, D for momentum to help it round out with a VGM composite score of A. They just had a pretty nice earnings beat. More than tripling expectations, nearly quadrupling expectations. And already, looking towards next quarter, there's a positive earnings ESP of almost 20%. So here we can see revenue numbers, huge revenue growth the current year, 12.8%. Next year, that's supposed to round off to 8.69. Translated over to EPS, to see this huge jump in EPS this year, with this airline expected to come in at $5.58 for the current year. Look over to next year, 13% growth again, getting up to $6.34. So those are some pretty big growth numbers there. And here we can see how that has impacted our Zacks consensus estimate. I mean, gone from 502 up to 558 for the current year. Next year's number has gone from 548 all the way up to 634. So moving in the right direction. And you can see over the last few quarters, there have been some pretty good beats. All a good thing. I want to show you this price consensus and EPS surprise chart. This really highlights the huge move here. The stock bottomed out into the beginning of 2023, and earnings expectations started to tick up right around that same time. So as these expectations have gone higher, the stock has followed suit. So things are moving in the right direction. As long as this can continue, you're all good. But obviously, this is a stock that was affected real negatively by the impact of the shutdowns for COVID, right? Because nobody was traveling, you couldn't go anywhere, we were all locked down. So it took a while to work this thing out. You can see these estimates start to tick up. No, actually, we were wrong. So all types of rough stuff happening, headwinds for the industry, and now things are really turned around, moving to the upside. You see these consistent beats here. So that is why I'm naming SkyWest my top stock pick of the week. Be sure to check us out on Zacks.com/promo for this week's report on 7 great stocks that you guys should check out and research more for your portfolio. So for Andrew and everybody else here at Zacks.com, I'm Dave Martosiak, and I'll see you next week.